What is up, YouTube? What is up, guys? Welcome back to another post trading analysis video. And it has been a juicy day. It has been a juicy day, total of around a 5% gain. And I took two trades today. I took one on gold and I took one on Ethereum. And to your guys' surprise, on gold, I did not take a Wyckoff trade. Around 90% of my trades are around Wyckoff, but I do have certain setups and certain entry models that are kind of around Wyckoff, but they're not specifically Wyckoff, right? So had a trade on gold, had a trade on ETH, and let's just get straight into it, okay? So on my screen, you can see the trade I took on gold, but as always, let's build some context first, okay? So for the people that saw my tweet about gold, I think like 2 weeks back, I had the most perfect short right from here, absolutely given on the silver pattern. And unfortunately, I did take profits around the range low right here, absolutely de-risking myself, but I did get stopped out on this move up in a slight profit, okay? So slight profit because for the people that don't know, I was aiming for this massive distribution where we have the one, the two, and the three. And then this was kind of like the four, but it was like this scenario where your Wyckoff model 1 flows over into your Wyckoff model 2, okay? So we came back from supply. I gave the setup here. We had an amazing move down, but instead of getting the follow through I wanted, we, kind of grinded upwards, and we were showing some signs of strength. Now, I have seen it happen where price unexpectedly comes back up, wicks the high, and then dumps down. And it kind of reminds me of that Euro trade that we had. I don't know if people remember. Let me see where that was. Yeah, that was right here. That was right here. It kind of remembers or reminds me of this situation where we had this beautiful Model 2 distribution right here. We had the range low, we had the range high, we wicked it, and then right here we grabbed extreme liquidity. If we go on a lower time frame, you can clearly see, I don't even need to draw it, we grabbed extreme liquidity, or you can just say we grabbed extreme supply because this was the 50-minute supply zone. And instead of dumping down right from there, because we got the confirmation in this retracement leg, but instead of coming down, it came back up one more time, sweeping liquidity again, still staying a Model 2 distribution, but your third tab just moved sideways, okay? If I can grab that third tab, there you go. So that third tab just moved one spot to the right. So that could definitely be the case because also here we got that nice liquidity build up, and that's just something I've been eyeing for a long time on gold, right? Where we have been just building up so much liquidity. But at the same time, if my chart can load, guys, trading view. There you go. It's not even laggy. It's just not loading. Okay, there you go. Like this liquidity buildup has just been absolutely insane. But at the same time, like enough is enough, right? Like if you just don't get the follow through, this is not going to come down. So I don't want to see it past this high anymore, right? Like the high we just put in right here, I don't want to see it past that high anymore because like right now, there is literally no reason to come higher. In my opinion, right here, there was no reason to come higher, but it does happen, like I just showed you guys, that sometimes you just come back for it and then you dump down. And it would be very, very pathetic if you didn't take the trade there, and then that ended up being the actual move towards the downside, right? So going into a lower time frame, I had that liquidity and we grabbed the liquidity, okay? And that happened yesterday. Now, obviously, I wasn't aware or I wasn't really behind the charge yesterday. I catched one trade, which we'll go over into later. But we did have a Wyckoff Model 1 coming into that high. So we had our range high and we had our initial range low right here. These were your starting points, these 2 points. You had a deviation of the low. Kind of had like a Model 2 in some sort, but it was on a very low time frame. Like you had your 1, you had your 2, and you came back for this extreme demand zone. So maybe you could have even traded that. I didn't pay that much attention to it. It was at 8 in the morning. You have your 1 tap. Let's check the market sessions. I always love to check market sessions. It was during Asia. Okay, so it was after Asia, pre-London. Not the most ideal times to trade. But, actually, it was an hour. Okay, my apologies. It was an hour before London Open, which is an absolutely amazing time to trade. Like an hour before London is an amazing time. So price came back here for that extreme demand zone. Price came back for that extreme demand zone. Did we get a structure break? Not on the 3, at least. We can use the 1. We can use the 1. Yeah, there you go. So on the 1, and then I'm measuring the highest point. So this is your tap 2. This is your tap 2 right here. This is your tap 3 of the Wyckoff Model 2 schematic. This right here is your highest point. So let's measure our structure from the top to the 3rd tap low. Kind of have like a lower high, lower low here. Lower high, lower low. You kind of came above it and then ended up going down again. Right here, you took the low one more time and then you went lower. So kind of making, this didn't even tap. Yeah, I would just watch the most recent one. You're on the low time frame. I would just watch the most recent structure that you can get, which would have been this high, okay? But if you pull it from the top down, like exactly from the top down, this would have been your high because this never went lower, okay? So from the top down, like the actual top down, this would be your structure pool. But then you can dissect it even more, as I've shown you guys with the structure and structure. Also in the Wyckoff tutorial, this would be your blue structure. Okay, so I would have watched my blue structure because otherwise you're not really getting a significant entry. But nonetheless, you actually broke both. So you broke both right here. And then you could have entered on the break. You could have waited for a retest. But the retest isn't guaranteed. So what you can always do is enter 50% on the break. And then watch for like a 50% retracement and enter the rest. Okay, but let's say you just fully entered on the break. You put your stop below the low. And then you target all the way up towards that high for a lovely 4.7% gain. Like this is a nice Wyckoff. And I really like about this Wyckoff is that your Asia session has such an aggressive move. And they swept all these sell side lows here. And then, you get the consolidation during the end of Asia pre-London. And then an hour pre-London, you get the expansion or the aggressive expansion towards the downside. Like, when I'm trading Forex and commodities, I always put more emphasis on timing because it loves to respect, more like the market session opens and closes. But this was nice. It was a 1, 2, 3, and it kind of went over, right? It kind of went over into a 1, 2, 3 distribution. And, why did this accumulation go over in distribution? Because we came at a very important area of resistance. We're in this macro distribution. So if the distribution is going to play out, we shouldn't close above this point, or we shouldn't pass that point because then we'll already be at the all-time high, invalidating the Wyckoff, right? So whenever you have an accumulation in this moment, an accumulation into a distribution would make more sense, right? So we got the 1, we got the 2, but I think this was on the news event at 14:30. There you go, 2:30. It was on the news, so I'm assuming an entry would have been way harder. Yeah, it's a very aggressive move. So unless you were like sure that this was going to be that retest high, I would not blame yourself for not having an entry on this because the break of structure is just very sketchy. But it did ended up being a Model 1 distribution, as you can see by the follow through from it. Okay, but this accumulation, that was a nice trade. But for the people that want to know, this is the market session indicator. So that is, where are the? Yeah, so if you go to indicators, it is personals. What if I show it to you guys? Market sessions. Why can I not see which this one is? It's like market sessions, but like by keto or something. Okay, so try and find this one, okay, with these inputs. Now, put your own time zone here, but what you want to do is you want to turn off this session 1, session 2, and you want to put these bars to candles. That's the key, okay? So put your colors here, put your time zones that you want the colors to appear, and then put the bars to candles, and then turn this off. Because if I turn it on, you will see that I get all these boxes on my chart. Right here, I got all these boxes of London, right? I don't want my boxes. I only want color candles. So turn this off, put this to candles, and then press OK. Now, this color thing, it doesn't work on the 2. It needs to have at least like a 5. I don't know if it works on the 3. Yeah, it works on the 3. It doesn't work on the 2 and the 1. So if you don't see it on the 1 and the 2, it doesn't work on that. But what you do is you just simply you press it. You click it once and you see. And then when you move it, it disappears. But you can kind of see the background color. But then every time you just press it, it will appear again. So it's just a nice little extra thing that I like to use to immediately see where my Asia price action was and my London, you know. Because what happened, right? You can see this. The timing on gold is amazing. During Asia session, you grab these sell side lows. Then you consolidated the rest of the session. And then an hour before London, right here, an hour before London, the break of structure happened right here. So an hour before London opened, the break of structure happened, and you got the entry confirmation to go long. And then guess what? London opened, push price higher, and then an hour before New York opened, you got the wick up during the news, and then New York opened right here, got the pullback, and continued the aggressive move towards the downside. You can clearly see that these hours before the actual market open are very good. I think even ICT calls it like kill zones or something. I'm not sure. I don't follow the guy, but it is a known concept. It's not something I discovered or anything. So, yeah, nice little extra tip and trick for you guys. Now, knowing that this right here was your Model 1 distribution, and you broke the range low from there, because if we zoom out, you can clearly see that this is a break of structure. So if you had to pull your main market structure to, it would just be one straight shot up and then a break, okay? So what I was looking at is obviously what is expectational order flow after a break of structure, after having a distribution, lower high for a lower low, right? Expectational order flow is lower high for a lower low after a break of structure. Now, I was checking, okay, where could that lower high potentially take place, right? So I kind of checked this aggressive move towards the downside, and this was kind of the only area that was unmitigated. So, you know, you have these like upwards candles before pushing down aggressively, kind of leaving an imbalance below. And then if you zoom even more, you can see this 3-minute order block, and it's kind of creates like a supply chain. So this 3-minute supply zone create this bigger supply zone. And then I also checked the volume within this distribution, and it was backed by that POC. So the most volume was traded in here, and then I put this, right? This was my supply zone, and that's also exactly what I posted, just to show some proof for you guys. Right here, let me grab it. No cappers here. Boom. So I posted this. No, this is not a public Discord, guys. I'm building something for you guys. It's not even funny. It's going to be insane, and it's going to be changing the entire trading space from an educational perspective. Like, it's going to be absolutely insane. So just be patient for that, okay? Be patient for that. You will make it, and I will help you with it. Trust me. Now, I was posting this POIs, obviously referring to that supply zone where I have my alert. You can see that alert right here on the right. Have my alert there, POIs. I was watching for a short down there. So what happened is, okay, we had the distribution after grabbing major sell side liquidity on the left on a macro scale. Expectational order flow is a lower high for a lower low. This is the only area that makes sense to reject from, because it's the only supply remaining within this move down. Now we just need to wait for a confirmation, because the way we came into our supply zone was so amazing because look at this slow grind up. This is just basically a trail of liquidity, guys. There is no support in this entire move up. So what happens once you break structure back to bearish, right? What happens when you break structure back to bearish? You have no support. It will be a very smooth move down because this is just liquidity. There's no demand zone in here, and every low is higher than the previous one. So you have a low, you have a higher low, and 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 a higher low, over and over again. So where do you think all these people that long here will put their stop loss? They'll put their stop loss below the previous low, and they'll put the stop loss below the previous low. So basically, this is just one move up with only stop losses below. Now, what happens when a long position, its stop loss gets hit? It will be a sell order, meaning price will have like a snowball effect down because it will all get hit in one motion. Okay, so that's always something extremely nice and something I put a lot of emphasis on when I'm trading, and it's just called your return to zone. So really put a lot of emphasis on that, and I don't think people notice that. And I also use it for Wyckoff, because when, let's say this was a Wyckoff and this was the range low, and the target of the distribution is the range low, like obviously it also needs to have a reason to come to the range low. So if you have this return to zone, you have this liquidity trail, it actually has a reason as well. Otherwise you're just saying it because I told you guys, but now you can clearly see it. So the only thing I was waiting for is because even on this move up, it was basically just Asia grinded up. Like here, New York PM session in pink grinded up, Asia grinded up, London grinded up. And then guess when the move happened, guys? Guess when the move happened? An hour before New York. Whoa, whoa, whoa. What a coincidence, right? Again, it's the exact same as last time. I don't know if there was news. Maybe there was news. But I don't need to know what the news is going to do because the news just searches for liquidity, right? And the liquidity was below, so the news will push price lower. So the only thing I waited for was a break of structure. Now, it was an aggressive break of structure, but following your structure right here, coming into that supply zone, you just have higher lows and higher highs, right? Boom, boom, boom. So the moment you break that low right here, that is it. That's confirmed. So this is where you enter on the break. This is where you put your stop loss. And then where did I target? Obviously, I targeted this low right here. Okay? Obviously, target that low for a nice 3.5% gain. And it was fast, bro. It was so fast. I was like, I didn't even have my take profit set because I was out of the house. But I didn't even have my take profit set before my take profit got hit. So I literally cashed out. I cashed out right around here when we went up again. I was like, oh, fuck. Because it was so fast. Like, this was, how fast was this? This was 35 minutes. Yeah, and I wasn't paying that close attention. But preparation is half the work. I had one alert, guys. I just showed you. I had one alert, and that was for this POI. And I got my confirmation. Because what did I tell you in the Wyckoff tutorial as well? It would just purely look at structure. You had your break of structure. So expectational order flow, like I just said, is a lower high for a lower low. Well, when is that lower high going to take place? Well, if you break structure, right? If you break structure in the move up, right? If you break structure in the move up from bottom to top, that's when that lower high for the lower low will be confirmed. So when the red structure breaks back to bearish, that will mean that the black structure will continue itself. Just a basic general understanding of how market flows using structure. Okay, so that's kind of the trade idea behind this. It's something I do when it's called a market structure continuation trade, where we grabbed extreme sell side liquidity with a distribution. We broke up. We're coming into our only resistance POI where we're expecting a lower high. And then we enter on the break that confirms the lower high and we target the new low. And it's almost like even more nicer if you have this return to zone. Like it's like the cherry on top. Okay. So it's a market structure continuation trade, but using the bigger context, Wyckoff is as always applied. So that was gold. I hope that was valuable to you guys. Also kind of giving you a bit more of an understanding of timing, because in crypto is 24/7, right? So crypto is less influenceable by the market opens and closes. But regarding gold and forex, you can have a very high win rate if you wait for entries also during the market or pre-market opens and closes, of that 1 hour before London opens, or that 1 hour before New York. So that was gold for you guys. I have a tiny position left running, so I took out 75% right here. So I made like 3%, and I still have 25%, and that stop loss is still above that high. So if it got stopped out, it's like for a tiny loss on that leftover position. But overall, this is a nice winning trade. I'm just still hoping for that. Move down, right? So we're gonna see how that turns out, because I do have to say, if this distribution fails, that's pretty bullish, right? If a massive distribution like this fails, it's pretty bullish. So going into Ethereum, man, oh man, guys, when I talk to you about, having such a high conviction Wyckoff, this was such a high conviction trade where you just have zero stress taking it eventually. So we all know, if I have to build bigger context on ETH, is that we came into a macro supply zone and we just got smacked down from it, right? And we were kind of wicking that demand zone that we had. But it's also not just a demand zone, it's our structure from the low up. So you have higher lows and higher highs, and you just wicked it. Now, guys, I don't want to lose this low. Like, I really don't want to lose this low, because if you lose that low, let's say it's a break of structure and you lose that low, obviously expectational order flow would be a lower high for a lower low. But if I go on the higher time frame, like the monthly, right? If I go on the higher time frame like the monthly, this is your black structure drawing, right? So I don't want to be a bear, but just using market structure, this will be confirming the rotation basically back down towards the macro bear market low. And ETH, the only way to invalidate this is to have a PO3. So instead of this being a break, it turns out to be a PO3. That is what Bitcoin had. But ETH never had a PO3, because you just had this liquidity trail going upwards, right? Which is why I was also never macro bullish on ETH in the bear market. So yeah, I don't want to sound like a bear, but I don't want to lose that low, because then that would be pretty shitty. Okay, so I am hedged. At least if that happens, I'll have a 6-figure trade. If this dumps down 70%, I'll make 6 figures in that trade easily. So what happened was we wicked that low, right? And it's a low we don't want to lose. Well, our most important structure and our most relevant structure is our structure from the top down. So any first signs of strength would be breaking our macro downward structure back to bullish, which is this high. Now, seeing the chart now, you can obviously tell that we never broke above that high. We just wicked that high, okay? So we never broke above it. Now, whenever you have such an important market structure high that you fail to take out, and coming into that high, you create a Model 1 distribution. It's actually something I called like a KCC setup. I named it like that. Do not ask me why I named it KCC. It's kind of like a me and my friend thing. Like me and Franzo, another good trader, created that model, and it's a high probability model. Like, these are normally, like, I have seen it fail once. Like, I swear to God, I have seen it fail once. Because for that model to play out, you need to have an SFP. You need to have your Wyckoff. And then not only do you need to have your Wyckoff, originally you need to have a Wyckoff on the retest. So you need to have a retest, and you need to have a redistribution on the low time frame. We didn't have that here, but what we had here was Wyckoff in Wyckoff, which is also enough, right? So right here you had a 1, a 2, and a 3 that was part of this 1, 2, 3. So you had Wyckoff within Wyckoff, which makes up for it, but this is a very high probability setup. And to be honest, I wasn't even aware of this trade until I opened my Twitter and I saw this guy talk to me about this setup he was eyeing, and I was like, oh damn, I trade ETH. That's a good setup. But I was at the airport, right? I was at the airport waiting for my girl. So I saw it and I was like, holy shit, this is a good setup. So shout out to, I think his name was like Bobo. Yeah. So shout out to that guy for making me aware of this setup. But yeah, what we had is we had our range points, right? So these were our original range points right here. This is how our range started. Range high, range low. And then you have your deviation of the range low. So that's extended, always showing signs of a potential accumulation. We got the move up. We had deviation 2, and then we had deviation 3. Now, again, you can say, whoa, guys, why is this not a 1, 2, and a 3? Because this just wicks the high ever so slightly, I think. Yeah, like by a cent. It's not even visible, bro. Like by a cent. Well, this range is not just a 1 hour range, because this is not just 1 hour structure. This is also like 4 to 6. Even on a 4 to 6 hour time frame, you can draw your structure here. So it's also a 4 to 6 hour Wyckoff, and then on the 4 hour, this local deviation just disappears and it becomes 1. Right? It becomes 1 move up, 1 move down. So that's something I went over into part 2 of the advanced Wyckoff tutorial. So if you do not fully understand that, I highly suggest you go check that out. Now, obviously on the third tap, we grabbed this main market structure point, which was just perfection. It was absolutely perfection. And now let's extend it to the new deviation high. The only thing we needed to wait for was a market structure break. Now, I waited for the most local break you can get, which is literally this most local structure pool right here. And what happened is the news came out and we wicked it, right? So I just waited until we had a close below it. So we had this wick right here, and then I waited for the close below it, and then I entered on the close. There you go. Put my stop above that third tap high, which is the most clear invalidation there is, and then you target all the way down. Boom. Okay. Now, what I tweeted about as well is that we had to be aware that it didn't turn into a accumulation. Because, as you can see right here, you see this 30-minute order block. It grabbed all this liquidity right here. You see all these lows. It grabbed all these lows. Lows closed higher, push price up, leaving an imbalance. Nice little 30-minute order block. And that's where price is coming into now. But we're coming into pretty deeply. So I think we could see it fill from here. But it could also turn into a Model 1 accumulation, right? It could turn into a Model 1 accumulation and we just reverse from here because we have been having some aggressive selling pressure. But this was basically it, guys. You had the Model 1 at a very, very, very key area on the chart, that market structure high. And instead of breaking it and spending time above it, we just wicked it and we came back inside the range immediately. And like I said, not only was this a local Wyckoff, it was Wyckoff within Wyckoff because, let's delete the setup because you guys know where I entered. If I just measure my market structure from top to bottom, you get high, low, high. So in the uptrend, you pull your range from top to bottom. And then you get this. You get your range high. Let's delete that macro EQ so it doesn't become too messy, like my chart's clean. High, low. And then we had deviation 1. I don't know if this was an accumulation, but it could be. And price grinded up. Let's extend it. And then we had deviation 3, which was deviation 3 of this local Wyckoff that had a 1, that had a 2, and that had a 3. But we also had 1, 2, 3. So you had double the Wyckoff, and whenever you have Wyckoff and Wyckoff, it's like double the confluence, right? Because when you have a break, it guarantees you that price will come towards this range low, but you also have the bigger distribution, so it will guarantee you that price will come to this range low. Now, I recently got a question, and it's a very good question in my opinion, and I've been getting it multiple times, and it's regarding, hey, how do I know which time frame break to watch for or to wait for, right? So let's say we have this distribution. How do I know I can enter on the 5 minute break and I shouldn't wait for, this like 30-minute break? Okay. And what I'll tell you is that first, the higher probability area you are on the chart where a distribution makes sense or a distribution will be very key, the lower time frame break you can wait for. So if the area is like, okay, this is the area to reject from, and then you get a Wyckoff, you can just enter on the most local break that you can get because you have very high expectations of that area working. Now, if it's just a normal area, and this wasn't that significant for you, what I will tell you is that it's always the best to, when you have a Wyckoff, let's say you have a Wyckoff model 1. This goes like this. So this was your original range. And you have your range high, range low, 1, 2. So then after the first deviation, you extend it. It's always the best. Let's say this was like a bit deeper. It's always the best to wait for the market structure where the market structure low is back inside the low, inside this range, original range values. So what I mean with that is, let's say we make this red. So right here, if we follow the structure from the lowest point between tab 2 and tab 3 until the third tab high, 1, 2, 3. This break right here, okay, this break right here is back inside this black range high, indicating that the break is also back inside the original range values, okay, using then the second deviation as your original range high. So whenever you have that, that's always better than entering on a break that's outside of the range. Now, it will happen where you see me enter on a break that's outside of the range. It's just that in those situations, I just have a very high expectation of the area working. But let's say you have your red market structure drawing. Okay, you have your red market structure drawing, but let's make this more like this. But that goes like this, and your break is right here. You also have even more local structure that goes like this. That breaks right here. It just moves like this. Okay, let's make that blue. So let's say you also have your blue structure drawing, and that already breaks back to bearish way before your red drawing breaks back to bearish. Now, as I always tell you guys, this one is so ugly. As I always tell you guys, your highest time frame market structure overrules your lower time frame market structure. So breaking your red structure drawing is more important than breaking your blue market structure drawing. But I have very high expectations of this area working, so I already enter on the blue. But what do I do the moment your blue market structure drawing breaks back to bullish prior to your red market structure breaking bearishly? Obviously, when that happens, you should put your stop loss to entry. You should de-risk yourself. When this happens, you should de-risk yourselves, because that will mean that this red drawing right here can continue itself for a higher low and a higher high, invalidating the Wyckoff. Okay? So be aware of that. That yes, you can enter outside of the range. It's always safer to wait for the break back inside the range, but that will also decrease your risk to reward. But if you do enter on that blue structure drawing and it breaks back to bullish, watch out, okay? Watch out. Now, it can have fake breaks. Let's say you have a supply zone here. It can have fake breaks to mitigate those supply zones. So always be aware of where your supply is, because those fake breaks happen all the time. And even I got smacked by it back in the day, where I was like, oh, fuck, it broke back to bullish. But then no, it was just a fake break to mitigate supply and then dumb down more, because you are eventually in a distribution. but that's how you would manage the trade, okay? You enter on the blue break and you just watch if the red also breaks. And if the red doesn't break, you just de-risk yourself by putting your stop loss to entry. Okay? So we had an Ethereum trade to wrap it up. We had an Ethereum trade. Wyckoff Model 1. It hit its target, you know. And I still have a position running on that. And then we had this nice gold trade, which was a market structure continuation trade. Okay? Absolutely lovely. And hope you guys learned something. And I will see you guys in the next video. So probably tomorrow. Love you guys. Peace.